Hello everyone, my name is Hassan. I'm glad to be your host for today's webinar. This webinar aims to guide you to use indicators effectively and elevate your trading game. As a brief context, the webinar covers technical analysis materials that will be provided to you with explicit details via an ebook that we prepared. The ebook entails an explicit explanation and discussion of the materials, simplified with practical examples. The financial market is a big world of opportunities. Every day, every hour, and every moment present a new opportunity for a new beginning and for profitable trades. This world seems so complicated to many. However, despite the existence of the complexity, applying a proper chart analysis will help you simplify the process to increase your earnings and master trading. One of the most important tools for traders is the indicators. So we're going to start first by exploring the support, the resistance, and the channels before moving to the indicators. The support and resistance level serve as straight line you can draw on the chart. Those lines limit the market movement. The support line, as you can see in the image, serve as the floor, while the resistance serve as the ceiling. So now to draw any support or resistance line, you need to ensure that the price has at least 2 touches. And the more touches you have, the more the support or resistance level is resilient to the price movement. As we follow up on the same figure, we notice at the end of this trend, the price broke above the resistance level and started fluctuating outside of it. This means that after this breakout, the resistance level flipped into a support. Also, we noticed that the price for a while tried to break above the resistance, but it didn't occur rapidly. There was a lot of resilience. So this resistance level we drew is very strong. Moreover, if we notice another support line that we drew, this support line level is very strong on the Ethereum chart. We see the price trying to break it for 6 times before breaking it eventually. It faced a lot of resilience. The support level is very strong. However, to further understand how strong the support level, we noticed that the price went back up again and started fluctuating above. Nonetheless, we would like to inform you about some false breakouts. As you see here, the tail, it's a false breakout. The price wasn't fluctuating here the way it did, forming a V shape. So it remains a support level. But when the price broke below it and started fluctuating down, it turns it into a resistance. This doesn't mean this resistance or support level is very strong. The price tried to break it again, faced some difficulty to eventually break it in the present time. We notice in this figure a previous support line that was resilient to the price for weeks. It is the same figure we presented. However, now we're having a look to the past. We notice another support line that is very resilient. The price tried to break it for weeks. It had some false breakouts here. However, when the price broke it, it made an immense drop. So this means the support level is very strong. When you have a strong support level and the price breaks it, you will have a significant price action after it. The support and resistance lines are not always horizontal. They can be formed the way you see in this image. And drawing a parallel support and resistance line will result with a channel. You will have a channel consistent of a support and resistance lines that are parallel, and the price would bounce up and down for a certain period of time. There is important information. It's good to know for you. We notice on this chart we have some support and resistance levels, and we have a channel on the gold price. We see that the gold recently has dropped significantly since May. It reached historical highs in May, exceeding $2,000 per ounce, and now it dropped significantly to as low as 1,900 approximately. the financial experts and professionals are expecting it to rise back up and reach around 1950 by the end of this year and around 2100 by June 2024. This only makes sense and is very logical because gold in general is a scarce and rare raw material that is considered a safe haven during crisis periods of recession, inflation, and it is always met with constant demand. You can certainly affirm the gold is soon to come price rise after it would break above this very resilient resistance line we drew. However, you can combine the support and resistance analysis with the channels. And when you see your support or resistance intersecting with the channel, it forms a very resilient area. So we can see the gold as the price tried on several times to break, but it couldn't break the channel. And in the intersection, it faced an immense resilience and it continued dropping afterward. So in summary, the intersection of support and resistance levels form some very resilient points. We highlighted them for you with circles in this image. Now, having unveiled the support, resistance, and channels, we're going to discuss the indicators. The first indicator we have is the RSI, the Relative Strength Index. It measures the speed and change of price movements presented in levels from 0 to 100. So if you go, let's say, to the TradingView website, you search for RSI in the indicators toolbar, you will have this RSI showing levels from 0 to 100. It consists also of two lines. One is purple, the other is yellow. The purple line is the RSI itself, and the yellow one is its indicator. You can also see that we have two zones, the overbought zone and the oversold zone. We have mentioned that the RSI displays itself in levels from 0 to 100. Whenever the RSI and its signal are above the 70 level, it's in the overbought, and whenever it is below 30 level, it's in the oversold. There's a high probability that the price would bounce from that. So as we see in a clearer picture, the overbought and oversold zones, to use the RSI for your analysis, you can see the movement of RSI in relation to its signal. Is the RSI going up and the signal going down? Is the are both going up and the distance is widening? This would mean that the price is probable to go up. You can also refer to the overbought and oversold zone. Notice in this picture that the RSI was in the overbought zone and it went down, driving the price down with it. And we should also, as a third point, take into consideration the intersection of the RSI with its signal. We can see that in the overbought zone, they intersected, causing a price drop afterwards. This is the USD Mexican peso chart. In another figure discussing the RSI, we can start the analysis by looking at the RSI being in the overbought zone for a respectable period of time, approximately 2 days, from 5 to 7 September. Whenever it is in a such zone, there's a high probability that the price would go down afterward. So on the 8th of September, the RSI line intersected its moving average, further increasing the probability of price drop, which indeed occurred with the price dropping from 17.7 to 17.1 at present time. After that intersection, we see the RSI distance with its moving average widening. So they are both going down, and the distance is widening. This signifies further the price drop. However, starting from the 12th of September, the distance started narrowing, and the two lines intersected today, setting a strong probability for a price shift. Nothing is for sure, it's an increased probability of a reversal. You can, however, notice the price reversals at the two previous intersections encircled in the figure. We can also refer to the RSI when there is a divergence. We will see an exemplified photo. However, to understand divergence, we have two types, a bullish and a bearish one. In a bullish divergence, the price displays a downtrend, while the RSI displays an uptrend. This signifies that although the price is dropping, it's gaining momentum and should make a reversal to start rising. On the other hand, in the bearish divergence, the price displays an uptrend. On the opposite, the RSI displays a downtrend. This signifies that although the price is increasing, it's losing momentum and should make a reversal to start to drop. In an exemplified photo, we see that the gold in two occasions had bullish divergence, and after that divergence, its price went up. The RSI divergence is critically important, and you can always rely on it when you are performing a price analysis and trying to predict the future price move. We can see in this Renault figure, the market reversals occurred after the RSI bouncing back from the overbought and the oversold. I have encircled the reversals for you. You can look at them and compare with the RSI being in the overbought and oversold zones. The second indicator we will be discussing is the moving average convergence divergence, which is written as MACD and pronounced as MACD. It consists of two moving averages lines, one being red and the other being blue. The blue line represents the short-term momentum of the trend. On the other hand, the red line represents the long-term one. Aside from its line, it incorporates histogram. The histogram is showcased in green and red bars. You can refer to the histogram and the moving averages when performing an analysis. The green bar in the histogram represent a bullish trend, indicating a growing uptrend, while the red bars represent a bearish one, indicating a growing downtrend. Growing green bars suggest a continuing uptrend, while growing red ones suggest a continuing downtrend, and the transition between red and green suggests a potential market reversal. The MACD is a good indicator. However, it's best being combined with other indicators and technical tools. We see the line crossed on plenty of occasions, but there was no significant follow-up on the price. However, we can see a stronger market change when the price broke through the channels through on the figure. Such type of indications serve as a confirmation for a profitable trade. I would like to share a very interesting information at this point. You can see two distinct channels on the figure. Remarkably, I plotted the second channel by simply copying and pasting the first one. This is a very strong indicator of the market's ability to recall and replicate a previous price movement, underscoring the concept of market memory. Notice the significant price drop after breaking out of each channel. So the market memory is something to consider, and it's a very interesting concept to look at. Now we have set the floor for our third indicator, which is the momentum. The momentum is very simple to understand. It simply measures the rate of rise or fall within a stock price and is displayed in one line. The momentum importance lies in their ability to mirror price movement more promptly in comparison to other indicators. You see a scenario in this figure on the right in which the RSI was yet to intersect with its moving average. In parallel, the MACD blue lines were drawing closer to the red ones, and its histogram showcased diminishing red bars. In this context, the momentum indicator took the lead, presented a substantial surge that served as an early signal of a significant price increase to come. So you notice a significant increase on the momentum indicator, providing an earlier signal in comparison to other ones. The momentum displayed the bullish move even before the other indicators could have confirmed the trend, emphasizing its unique and valuable role in early trend identification. The fourth and last indicator we will discuss is the copy MMA. It's also a simple indicator, despite complex, a lot of number of moving averages you see in the figure, it's very simple to read. The copy multiple moving averages GMMA indicator capitalizes on signals from moving averages in a very interesting manner that help a trader catch a trend as it starts to capitalize on its entirety and make significant profits. At the same time, it allows a trader to get out of a trade as soon as a reversal is about to occur. In other simple words, the trader can easily determine when to get in and when to get out of a trade to make the best out of it, securing the profits they desire and avoiding the losses they do not. So the indicator presents 12 moving averages divided equally into two groups, 6 short-term moving averages and 6 long-term ones. One group is colored in green and the other in red to use this trend for an analysis. To enter a trade, a trader must wait for one group to cross the other. In case the green ones cross above the red ones, it signifies an uptrend and vice versa. If the red lines cross above the green ones, a downtrend will pursue. The copy MMA speaks for itself. With a recent look at the gold chart, we see the green group crossing above the red ones on August 22nd, 2023, setting the stage for a significant price increase. Later on, between 25 and 29 of August 2023, the green group started heading down. Nonetheless, did not break below the red line, but rather bounced back up, signifying the continuation of the bullish trend and more price rise to come. Overall, the price under the copy MMA signals went from $1,890 to reach as high as $1,954. Catching up on such a trend would generate significant profits for any trader, and the copy MMA is very useful in this respect. A follow-up on the very same gold chart for September 2023, we noticed the green group crossing below the red one on the 5th of September, setting the stage for a significant price drop. The green group failed to break above the red one between the 8th and 12th of September for the bearish trend to pursue. On September 15th, the green group crossed above the red one, and the price followed suit by increasing. To affirm the continuation of this bullish trend and to properly combine the necessary tools for your analysis, you can wait for the price to break the resistance level of this channel in this figure. Always remember that education is a continuous process. We presented some very valuable information for you today, and it's a priority for us to put your interest at the heart of the business and to create a long-term and sustainable relationship. Therefore, we would like you to stay tuned for more webinars and materials to come. The materials presented in this webinar will be available to you via an ebook that we prepared. You can always attend our seminars at the Beirut office every Tuesday and webinars online every Thursday. To stay updated, we recommend you to join our WhatsApp Academy group, to which we announced our free courses ahead and regularly share market information for free. I would like to thank you all for listening. I will be giving you displaying to you the link and the barcode to join our academy.